The country's biggest company, Fonterra, is milking it literally and figuratively. In its annual profit announced today, it's up by 2/3 to $834 million, despite low milk prices. We've heard so much about them, of course, and in part on stronger sales of a higher value consumer product base. The world's largest dairy exporter is signalling better times over the coming year for its farmer owners, with the total payout forecast getting close to $6 a kilo. Now, our economics correspondent Patrick O'Mara reports on this.
Fonterra's chief executive, Teo Spearings, was in the gun earlier this year, under fire from loss-making farmers as weak dairy prices and its debt mountain raised questions about the company's financial viability. The cooperative responded by axing jobs, turning more milk into high-value consumer products like cheese and infant formula, and selling assets. Mr. Spearings admits it hasn't been an easy time.
It has been challenging, very low prices for a long time, a lot of stress on our farmers in an unstable world, and our farmers have adapted efficient and innovative systems in a tremendous way. But we in the business have also adapted, and we drove this transformation, which really brought back good results, but also proves that the strategy is working.
The head of private wealth research at Craig's Investment Partners, Mark Lister, says Fonterra has done well, ironically at the expense of its 10,500 odd farmer shareholders.
We've obviously seen milk prices lower than many farmers and Fonterra would have liked over the last couple of years, but that is in some ways an input cost for Fonterra, so they've been able to maintain some strong profits and they've had a big turnaround.
Fonterra confirmed a total payout to farmers for the just finished season of $4.30 a kilo of milk solids, the second season in a row below the break-even mark. But dairy prices are now on the rise, with Fonterra yesterday boosting its payout forecast to $5.25 a kilo for the current season. Mr. Lister says Fonterra appears to be in a sweet spot.
I think they'll be pretty relieved that on the one hand the company's in good shape and the earnings are well and truly going in the right direction, and at the same time we've seen the payout boosted back up to $5.25, which is still not where it was back in 2012, 2013, 14, but it's a whole lot better than being down where it was starting with a 3.
Federated Farmers Dairy Chairman and Fonterra supplier Andrew Hoggard says he's particularly pleased Fonterra's debt has fallen from 50% to 44%, putting it inside the cooperative's target band. He says farmers should be happier about the way Teo Spearings has been running Fonterra.
I think he would have ticked a few more boxes in the popularity stakes amongst farmers. I'm sure there'll still be his detractors out there. But yeah, I think there'll be more viewing his performance a lot more favourably than perhaps, say, a year ago.
Fonterra is warning that the global market is still a challenge and milk prices are still too low. Nevertheless, its chief financial officer, Lucas Paravicini, did strike a note of optimism. Fewer cows have slowed global production, and Mr. Paravicini says it won't be easy for supply to ramp back up in response to higher prices. He says anything above $5.50 a kilo will prompt farmers to consider spending heavily on producing more milk. For Checkpoint, Patrick O'Mara.